Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be covering the Bitcoin miner valuations. This is a chart that Anthony Power put together for us, so we're going to have his analysis, talk about some of the comparative metrics between the large publicly traded Bitcoin miners based on their recent share price runs. In addition to that, in today's video, we're going to be talking about the huge announcement out of Marathon and their $179 million purchase. So we've got a lot to go through today. Before we get into it though, please take a second, hit the like button, you guys. It helps get this content to other people who may find value. If you're not currently subscribed to the channel, McNallie Money, feel free to join. And let me know in the comment section below what you think of this valuation comparison, which of the miners you're currently holding, and your top pick for 2024. In addition to that, we're doing some giveaways for the holidays, so make sure you leave a comment, and the top comment is going to win some swag. Now with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're welcoming back Anthony Power. Now since yesterday, there's been yet again a huge development in the Bitcoin mining space. This time coming from Marathon, which is now the biggest player in the sector. So we're going to be covering that in today's presentation. And lastly, or after that in today's video, we're going to be going through a valuation table that Anthony has put together. I know a lot of you guys have been asking about this. How do we compare the various different miners? Are there differences between the big, middle, and low or smaller end miners? And we definitely want to talk about that because there are some patterns emerging that both of us have seen. So Anthony, thanks for being here today. Again, a lot to talk about and super happy to have you.
Thanks for having me.
So overnight, Marathon has come out, made an absolutely monstrous purchase. I think $179 million, buying multiple sites, pushing towards vertical integration. Marathon for a long time has been on the hosting model. Obviously, a lot of people are talking about their daily and month-to-date production. They've been absolutely firing on all cylinders, especially in light of these enhanced transaction fees, which we covered in yesterday's video. So Anthony, what do you make of this this huge play or huge move by Marathon?
Yeah, it's a good move, and in all honesty, it was coming really. I mean, I had an opportunity 18 months ago to have a good conversation with Fred Thiel, the CEO of Marathon, at a conference in London. And we were discussing the advantages and disadvantages of the infrastructure versus the asset-light model in the context of Bitcoin mining. And at that point in time, you know, Marathon were fully hosted as a mining company, and not many of the miners were going down that route. Most of the miners were going down the infrastructure route. Fred was very bullish on this, though, you know, spending all their capital on mining machines and not putting it into infrastructure. And actually, if you look at it from that perspective, it sounds great. Why buy big sites like Whinstone or Helios or Childress? You know, these, you know, capital intensive sites compared to where you can just, you know, take your mining machines and put them into a host facility and switch them on. If only it was that simple. You know, if only it was that simple. You know, Marathon have had, you know, a number of issues over the past 18 months with regards to getting their mining machines into locations in time for when their orders were due. And one thing you don't have as much of when you are a hosted miner is you don't have as much control over what's happening in the facilities. And I think Marathon have looked at this over this period and have realized, you know, when you're looking at their output production by their, you know, their significant exahash, it's not been as good as some of the miners on an exahash level playing field. So, you know, we look at the likes of Bitfarms and Hive and CleanSpark. You know, they've been constantly producing great production with obviously a lot less exahash, but getting the most out of the machines. And we've seen Marathon, although they've improved in the last few months, they've been, you know, having a challenging period over that period. Yes, they mine a lot of Bitcoin, but if you look at the amount of hash rate they've got, you know, you'd expect them to mine more Bitcoin. And this significant purchase, like quite rightly say, 179 million, acquiring 2 operational facilities from Generate Capital subsidiaries, And, you know, it starts to move them now into, you know, that direct ownerships of mining sites. And it will, you know, it'll take them to about, you know, 910 megawatts of power that is in their portfolio. Another reason for doing this is, you know, this is going to cut their operational costs as well. I mean, when I spoke to Fred, you know, 18 months ago, they had a great deal as a host miner. I think their energy rate was 3.7 cents a kilowatt hour, and they had a 0.5% hosting fee on top of that, so 4.2 cents kilowatt hour. However, you know, 2023, when, you know, move forward 18 months, we've seen the driving energy prices increasing significantly. That fee, including the hosting fee, is probably closer to 6.6 or 6.7 cents a kilowatt hour. So that's significant. And when we compare that to some of the miners with their own sites, you can look at the likes of Cipher Mining, who are paying about 2.7 cents a kilowatt hour. You've got TeraWulf, who've got 2 sites, and they've got a blended figure of about 3.5 cents a kilowatt hour. Even if you just look at the energy cost, when Riot platforms, you know, actually use their machines for mining Bitcoin and not for energy strategy, they've got about a fixed price of about 3.9 cents. So a lot of these miners are getting, you know, closer to that 4 cents or below that 4 cents kilowatt hour. And Marathon have sort of been paying the price for being hosted. And you know, at the end of the day, with energy prices going up, you've got the host company wanting to make a profit as well. And so, you know, it's probably, you know, 18 months further on from that initial discussion, they're having this sort of like this change to go infrastructure now from an asset light point of view. And I think it's probably the right decision for them. And, you know, they've got the money on the balance sheet to go and purchase these sites from cash. They've also got a significant amount of Bitcoin hodl, which will probably, you know, be closer to 15,000 at the end of December. We spoke yesterday about all the various increases, but this stands them in good stead. And I think, you know, we're not told in the update as to what machines are going in there, whether it's going to be new orders or whether they're going to actually move some of their machines from current locations and put them into this one location. I'm sure there'll be further updates out there. And we discussed on the last podcast that, you know, all the big miners have been updating their big purchases of the latest mining machines with the lowest efficiency, and we're just waiting now for Marathon to announce what they're going to do. So yeah, so a good update today. Very positive news. It's had a positive impact on the share price. The share price has increased, and you know, as we speak today, the market capitalization for Marathon is getting closer and closer to 5 billion, and that's a significant jump to where we were at the start of the year. So yeah, so a good news all round, and good news seems to be coming out every day from the miners at the moment. So we take that on board.
Yeah, we've definitely been on a roll over the last few weeks, a well-deserved roll for all the people who stuck through the bear market. And I'm glad you brought up how they were actually funding that purchase, because that's significant to peel almost $200 million off your balance sheet in cash, have no dilution or don't have to issue any more shares. I know the Marathon fan club is going to be loving that. And yeah, a monstrous move out of a monstrous miner. So we'll see how Riot and the rest of the gang counter that move. Now, speaking of market cap and some of the big moves we've seen in share price over the last couple of weeks, I wanted to talk about your valuation table, because this is one that's specifically been requested in a lot of the comment sections. We've talked a lot on this channel through CEO interviews and discussions like this about differences between the large players in the space and the small players. And for a lot of times, or for a lot of situations, it came down to balance sheet strength and fleet efficiency. Now that we've seen the increased transaction fees, we've seen Bitcoin price appreciate, there's a lot more flexibility for some of these smaller miners, and that's really reflected in this table. So Anthony, I'll pass it back to you. Walk us through what you put together here, and then maybe we can talk about the trends.
Yeah, so just to start the conversation rolling, you know, I want to talk to individuals about what the enterprise value is. I mean, we look at market capitalization. So the market capitalization of a company is basically the share price times the number of outstanding shares in a company. The enterprise value takes that a stage further. The enterprise value looks at the market capitalization and then looks at the amount of debt held on the balance sheet, current and long-term debt, and also looked at the cash position as well. So, you know, to calculate enterprise, you would add the amount of debt to the market capitalization and then deduct the amount of cash or cash equivalents. And in this table, I've also included, to make it a level playing field, the amount of Bitcoin hodl that these miners have. And if you look at the table, just over half of them have a hodl at the moment. There's quite a few that don't have a hodl. And that gives you then an enterprise value. And what does that really mean to people? Now, if I put it into a simple example, if you're going to buy a company, say, for $100, and the company has $10 of debt, when you buy that company, you're buying the debt too. So effectively, that company is costing you $110. If the company has $20 in cash when you buy the company and $10 of debt, your $100 that you're paying for, you'll have $20 when you buy the company. So that reduces that back to $80, and you've still got the $10 of debt, which takes it to $90. So actually, you're buying a company for $90 effectively. And that's why the enterprise value is a really good metric to use when using comparisons. So I've calculated the enterprise value less the Bitcoin hodl for the miners in the table. And what I've done then is I've looked at the energized hash rate for all the companies at the moment. So I'm not looking at future hash rate, I'm looking at the energized hash rate now, because the market capitalization takes account of where we are today. And so if you take the enterprise value and divide it by the installed energized hash rate, then you're going to get a value per exahash for each of these companies. Now, we've seen in the last few weeks, the rise in some of these companies has been astronomical. The likes of Bitfarms, the likes of CleanSpark, the likes of Marathon Digital, the likes of Riot platforms, they've really, really grown. So when you look at the hash rate they've got and then divide that into there, you then see a picture that actually some of these bigger miners have got a higher figure per installed hash rate than some of the smaller miners. So that potentially means, using this metric, there is some value out there in some of the smaller miners, or some of the miners that haven't performed, their share price hasn't performed as well as others. And so, it's an interesting statistic. I have made allowances for certain miners that have got additional businesses. So if you look at the likes of Bitdeer, their self-mining business, and I'm not sure if people are aware of this, only represents 40% of the whole company. So they have a hosting business, and they have two other business models that they use, which are very, very profitable for them. But their actual self-mining only brings in about between 35 and 40% of the revenues and costs associated with the company. And maybe, some people out there don't need to do a little bit more research to find out more about that particular company. The same again for Riot platforms. Riot have a significant hosting business, and they also have a significant engineering business, which they purchased about just over a year ago. And so I've made allowances for those. TeraWulf as well have a small amount of hosting, so I've made an allowance for those too. So, and Core Scientific have a significant, probably one of the biggest hosting businesses of the miners that are listed in this table. So I've made some allowances for all those. And once we start looking at the metric at the end there, we can see that, say, for instance, if we take Argo, for every exahash Argo, the value of that exahash is $59 million. And if we look at, say, CleanSpark, the value for every exahash they have, because their market cap has gone through over 2 billion, is $190 million. So you can see, if we look at the value companies there, DMG at 38 million per exahash, we have Bitdeer at 43 million per exahash, and we have SATO technology at 58, followed by Argo at 59. So, this is only one metric, and I stress that, I don't want people rushing out there thinking, let's all buy some of these, companies. This is where you get this table and you do more due diligence to go forward and look more into these companies. And we'll cover in another podcast, we'll cover, the costs of mining, because that's equally important. you want to make sure that, your miners are making a profit going forward, and we'll cover that in another exercise. So this is just one metric, but it's an interesting metric based on the fact that now some of these miners' share prices have ballooned significantly in the last few weeks, and far significantly than the price of Bitcoin. We showed in the last podcast the Bitcoin price this year is up about 150%, and most of these miners are up significantly above that, with some of them over 400, 500, and one over 800% higher. And after yesterday's rise, probably over 1,000% higher. So, it's an interesting table. There's still obviously some room for growth in some of these companies, but it's just an interesting metric to look at now. With the companies buying more machines and growing their hash rate, it'll be interesting to see what it looks like once those are installed at that point in time, and look further at this to see, because we know CleanSpark are going to double their hash rate. We know that Riot, when they install all their orders, are going to get to 35 exahash, and at the moment they're at 12.4. So there's significant growth some of these mining companies. But this is a snapshot of today, and look forward to seeing the comments of what you think about this particular table, and how you'll use this table to to start your analysis and look further into these companies. But
yeah, it is an excellent view, Anthony, and I want to stress, you guys, not financial advice, one metric, and as Anthony said, this is a snapshot in time, but it's definitely a great way to compare different companies in the same sector that have different debt loads and stuff like that. The other thing I was going to say is a lot of people have been asking about our personal trade strategy. So Anthony and I talk just about daily in terms of personal trades, moving money between companies. I do a lot of option trading as well, so I've had some questions. So we're looking right now to get a Patreon together, and if you have any specific questions like that, we're more than happy to help, just obviously not in a public video setting. So Anthony, appreciate the analysis here. This is great to see. As you alluded to, this table is going to look drastically different as we move into 2024 with a lot of these purchase orders and new rigs coming online. So this will be one that's interesting to follow, but we really appreciate you putting it together, and would love to hear the comments below. So guys, if you're still here, make sure you hit the like button. It helps get this information and content to other people in the industry who might find value. If you're not part of the channel, McNallie Money, feel free to join. Give Anthony a follow on X as well, and we'll see you in the next video.